Are you a wealth management professional looking to simplify the complexity of the evolving wealth management marketplace? Don't miss the Australian Wealth Management Summit coming soon in May to the Star Sydney. Learn from industry trailblazers as they explore opportunities and challenges in the wealth management industry, equipping you with the knowledge to navigate the complex marketplace. Senator Jane Hume, Shane Oliver, Cassandra Crowe and Alicia Gregory will be keynoting the event as they dive into the intricate landscape of domestic and global economic affairs and set the stage for transformative change in wealth management. Visit AustralianWealthManagementSummit.com.au today to secure your ticket.
This is a Momentum Media production.
The SMSF Adviser Show, your expert insights into the biggest themes shaping the SMSF advice industry.
Hello and welcome to part 2 of a very special podcast series. I'm your host, Keith Ford, joined as always by my co-host, Aaron Dunn of Smarter SMSF. How are you, Aaron?
Very well, Keith. So the dust has settled. We're back here at our desks. So, but it was certainly a wonderful conference and it was a great opportunity, as you said, to catch up with a broad range of those that presented at the SMSF Association National Conference.
Absolutely. So this is part 2 of our special 2-part podcast wrapping up the SMSF Association National Conference. As you mentioned, we had a great lineup of guests. The first podcast, which everyone I'm sure has already listened to, already in their feeds. They've been enraptured by our interviewing skills. We had Justin McHale from the ATO, and we had Tim Steele from Class and Meg Heffron from Heffron. That was the first one. If you have not listened, I don't know what you're doing. You definitely need to jump back into the podcast feed of whoever your podcast provider is. Get in there, have a look, have a listen. There's a lot of great stuff in there. But today we're going to be presenting 3 other interviews also recorded on the conference floor at the Smarter SMSF booth.
Yes. So as you said, we had our chair of the SMSF Association, Scott Hay-Bartlem, and he gives us some insights into the SMSF conference, what is behind it, and the importance of it as really one of the preeminent financial services events throughout each and every year. We then have a chat with Katie Tim. So she gave us a fascinating insight into business, real property and farmland. And I think, Keith, it'll be fair to say, as people listen, we learn a hell of a lot in our conversation with Katie as well. And I'm sure you're going to as well. And then we wrap up with Julie Dolan, who looked at a broad range of estate planning issues and practical implications when a member dies.
Yeah, there was a lot in there, a lot to learn from everyone involved. We don't want to spoil any of that off the top. As you mentioned, we are no longer on the conference floor. We're back in our offices, nice and cozy, getting back to the realities of a normal working week. But yeah, I think without too much further ado, we can just throw across and everyone can have a listen to these great interviews.
We hope you enjoy.
Okay, we're joined now by Julie Dolan, who's a partner at KPMG and head of SMSF and retirement planning. Thank you for joining us on the show today, Julie.
Thank you. Thanks for having me.
Not a problem. So we wanted to talk a little bit about your session that you presenting here at the SMSF Association National Conference. You spoke a lot about navigating the intricacies of SMSF management upon a member's death, which obviously is not something that people want to deal with necessarily,
no,
but unfortunately is inevitable and is something that's going to come up.
It's the old death and taxes, isn't it? Right?
Death and taxes,
do certain things in life.
It's all combined right here. So your session, you looked into what practitioners need to know in how to administer the death benefits, while also ensuring compliance with the SMSF regulations. Would you be able to just try and help give us a bit of a rough guide through some of these issues that you covered off in your session at the conference?
Sure. So there's a lot of overlay of regulations, legislation, both in the superannuation and the tax world. And we've also got an overlay of legal documentation that needs to be considered. So our role as an SMSF advisor is obviously to understand the client's profile, where they are in the life cycle of an SMSF, and then work through the maze of all the different rules and regulations and make it simple make it easy for them to understand and make it tailored to their situation. So the session is really navigating those complexities and showing practitioners that, yes, we do need to go to the Bible, be it the trust deed. We do need to go to the source of truth, be it the legislation. But we also need to pull back and be understanding of all the little bits of practicalities that we need to consider, so that not only are we doing the best job for our clients, but we're also protecting ourselves in the sense of making sure we're not breaching any crossovers of legal advice, or what needs to be considered for the accounting side of things, or even what other advisory opportunities are we missing out on, or are we not covering.
So one of the, and we were just talking to Scott Hay-Bartlem, more in respect to him and his chair role, but he's obviously talking about death as an issue, his favourite subject. But one of the things that is so wonderful of this conference is the fact that we get so many different perspectives on topics. And one of the things with your session obviously highlights the importance of collaboration with different professionals, and the fact that part of the skill set as an SMSF specialist is to not only help navigate those issues, but at the right time bring in the right people to then help obviously execute on some of those things as well.
Absolutely. It's critical. We can't sit here and think we know everything. And what I'm doing at KPMG is actually launching a national estate planning business around the project management of. So the concept that I see I've done for so long and I know it works is to sit here as the driving force, as the project manager, and we have the relationship with the client. So getting down and deep to what their objectives are, and then following through a roadmap of what needs to be done and who needs to be brought in when. And then at the end of the day, we've got a very tailored set of legal documents. The family's being collaborated with, the financial advisor's being collaborated with, the legal practitioner, and anyone else involved. Also, what I find, it even expands out to, depending on where their business is in the life cycle, we may need to have to look at family governance and family offices. We may have to look at cybersecurity issues or ESG issues. So we're the guiding light, taking them through this journey, holding their hand, making sure it's not stressful, and ultimately making sure that it gets done for them. Because as I mentioned in my session, one of the biggest issues that we're finding with clients is that it's just too hard. They don't know what to do. It's not a topic that they wake up in the morning and go, let's go and do our estate planning documents today and let's be excited about it and bring the family around for a roast and talk about it.
Really exciting, energising conversation just to bring the family along for the journey.
But it's the peace of mind. I think that's the most powerful thing that I love about this journey, is the peace of mind that I know that I've helped a family stay together. I've helped them avoid any potential litigation issues that lawyers do hover around and are ready to grab. So that's what we can really offer to our clients.
So where do you see some of the most common pitfalls and or errors in dealing with this area?
Oh, goodness. Where do we start?
Sorry for the later question.
Yeah.
The person dying to begin with.
Yeah. Right. Not starting the conversation is the biggest one. Don't think, oh, they're only in their 40s, I don't have to have a conversation. Starting the conversation, that is the biggest pitfall I see. Just start. Have the confidence to ask the questions to your clients. The second part, I would say, is in the SMSF arena, not pigeonholing the SMSF in its own, being a segue to have a bigger conversation around their whole affairs. We're in a perfect position as SMSF specialist advisors to start there and educate on the bigger piece. That's another big area I find, looking at it in isolation. And then two, not understanding and appreciating the underlying source documents, the control documents, the trust deed, the corporate trustees, the shareholding position. All those control documents need to be fully understood.
Yeah, and I spoke about this in my session as well, that too often we kind of look at the simplicity of the Section 17A definition, but you've actually got to look well below the surface, and there are so many layers to what sits underneath, subject to whether you've got corporate trustees or individual trustees, and the shareholding and how decision making is made within the fund, and all the nuances that go beyond that. And I think the older the fund, the more important that actually has to become, because the attention that we spend today on these issues is nowhere near the attention that we spent on it a decade ago or even 2 decades ago.
Oh, my goodness. And also the profile of the SMSF industry, which what I highlighted in my session yesterday, 55% of members are 60 and over and 80% are 55 and over. It's something like that. So we're compared to the APRA demographic, we are in a very ageing profile of our funds. Throw over the $3 million cap, throw over the death benefit tax. We have to really have these conversations now with clients, because otherwise, if we don't, and we don't get to understand the needs of the next generation, on a business perspective, it could be a real shift in this industry in the next 10 to 15 years, let alone what advice is the next generation getting.
Yeah, that idea where you mentioned the younger kind of members, like someone around their 40s, talking to them about it. It's the kind of thing that when they're setting everything up or they're thinking about this, they're definitely thinking, oh, this is going to be ages. But it's probably even more important for them, because if something unexpected happens and they pass away while they're quite young, all of the planning is definitely not going to be in place. And so then the fallout of that is so much worse than when you're maybe not accepting of it, but some ways expecting it. When you're older, there will be at least some framework and your kids will be older and things along those lines. But if you're 40, then the fallout of that is so much worse.
Younger kids, insurance,
it's terrible.
Debt, all the
terrible.
The dynamics are entirely.
And if you die intestate, well, then you've got to then go through the courts or wait for administration, and then what happens with the children and what happened with you just don't want that. I unfortunately do see it a lot where people have passed around me in their 40s, clients, and they haven't got a will. Their family is distraught. It's just not nice. And it could have just so easily been changed by just having a conversation.
Yeah, it's that kind of thing, because it's not something that comes up around me very often. Being a journalist, not someone who's dealing with death benefits, it doesn't come up that much. But when you're seeing how frequently it does actually happen, just the importance around that just, I guess, skyrockets.
Yeah, it really does. And I could go on forever around this, because for me, it really correlates into the are you okay with mental health as well. So it's this whole just taking another layer of unnecessary stress out of a client's life to make sure that their family is okay.
Well, thank you. It's great to catch up again at the conference. And, again, one of the topics that is a huge issue that we naturally see at the conference that we get a lot of people attracted to, but the diversity of views, as I said at the very beginning, really all lead back to the practical elements of it. Making sure we're having conversations, making sure we understand what the client wants, and then using our own skills to be able to deliver that and getting the parties in place. Absolutely crucial. You nailed it.
Thank you
for your time.
Thank you. Thank you so much. Thank you.
All right, we're joined now by Katie Timms, who's the Director of SMSF Services at RSM Australia. Welcome to the show, Katie.
Thank you very much. Happy to be here.
So, Katie, I'll kick things off here. You spoke about the topic of farming assets inside of self-managed super funds. And as we know, the use of farmland and SMSFs is hugely popular because of the exceptions that sit around business rural property and the like. So maybe give us some highlights of the areas that you touched on. And obviously this is an area that you have quite a lot of experience in.
Yeah, it's quite funny. It's an area that I fell into by accident. I'm not a farmer. It's never been part of my background, but it seems to be a lot of people that I deal with.
And you're
these
not wearing
days.
gumboots either, just for everyone.
I'm definitely not wearing gumboots. I can tell you that when I wear these heels into small regional towns, I stand out massively amongst the crowd. They point at me and, well, there's the city super lady that's come to visit. But look, I guess farming, it's actually quite funny. I got to the end of the session and thought to myself, I've actually almost talked people out of having farming assets inside of super, just because there's so much complexity around it. Particularly now we're seeing a lot of changes, the gnarly issues that are going to start coming out for farming, the risks and issues we have around succession planning, intergenerational transfers, valuation problems. There's so much complexity. It's the only word I can use. It's the complexity around it for an issue that a lot of people think is really simple, and it's not. You need to actually understand a lot about farming to be able to really help clients have farming assets inside of their super.
So can you kind of give us a couple of examples around that?
Yeah, look, the valuation one is a really big part of it, because you can have two properties that sit within, 200 metres of each other that have vastly different soil types, vastly different water needs, vastly different yields, which can have a massive impact on the different kinds of, valuations that you can use. So being able to just apply the nice little, it's this much per hectare and that sort of thing, well, you can't do that for a lot of these farming properties.
So
you can't make it simple.
Yeah, so you can't just kind of go in and get your valuation like you do for your residential property. And so the auditors are naturally asking more questions about this to give themselves comfort. And then when you're getting down to soil and all that sort of thing, my head's just going, wow.
That's really good, because now you know how I feel when we talk about the really technical SMSF stuff. That's how I feel.
Yeah, no, but it's a really big problem. I mean, and then look, the other big thing with super, it's succession planning. It's intergenerational wealth transfer. Quite often what I find now is I'm dealing with the people that put farming property in super in 2007, right? We had the $1 million, great opportunity, let's get in there. And now we're going with, maybe we shouldn't have really done that, because now we're trying to plan how do we get it to the next generation.
Yes.
Which is expensive, time-consuming, and emotional.
And there's no real mechanism within superannuation to facilitate that intergenerational piece. So it does become so much more structurally challenging to deal with. And therefore, like you said, you're now going, well, we might be dealing with, well, do we actually have succession on the land ordinarily? Versus, well, we actually do, but how do we actually reconfigure the asset that's being held in the fund, and where does it need to go, and what are the costs attributed to that entire process?
Exactly. It's not an easy process. And farming businesses, look, all family businesses have emotions attached to them. They have that inherently. But family farming just seems to have so much more. Quite often the family farm, it's the family home, like it's multi-generations. Sometimes, as I said in my session, quite often in rural areas, your street name is your family name, because that's how long the family has been there. So, having to try and find a way to pass that to the next generation with all of the things around super, issues, it's just really, really complex. I'm not even going to talk about, the evil daughter-in-law that's always trying to steal the family farm, and the off-farm daughter or the off-farm son who wants more money in estate planning. There's all of that attached to it as well. So it's not an easy area. It can be interesting if you enjoy that sort of stuff. It's a real challenge, but a lot of human emotion attached to it.
There are a lot of risks around the non-arm's length transactions with this, because obviously, as you mentioned, they are living on the property, which is part of the SMSF. So how does all of that kind of work and play into all these discussions?
I think it's going to be a problem that's going to start to become more and more apparent over time. There's been a lot of, do you know what? We just won't ask the question and no one will notice. Because with farming properties, it's the farmer that does all the spraying, all the repairs, all the fencing, all of that. He's paying for all of that out of the farm. What if that is actually a super fund asset that should be an expense? Are we, not paying for everything? Do we have a gnarly risk if someone's living rent-free? And then you get into the, well, we're actually doing up the farmhouse. Now, I can tell you every single farmer runs that through the farm because it's a repair, but it shouldn't be. We're renovating a super fund asset. So I think as gnarly and gnarly are starting to become a little bit more prevalent, it's all we're talking about realistically, it's going to become more and more of an issue for farmers. And it's a difficult thing to explain to them as to why they have to change something they've done for the last 40 years as part of normal farming practice.
Well, speaking of change and other burning issues in our industry, and we note the SMSF Association has been quite vocal with farmers and working with the Nationals raising these issues, is Keith's favourite topic, Division 296 tax. And I know you've been involved in some of the submissions around this topic. Can you highlight to our audience why this is such a burning issue with farmers?
Yeah, look, it's a burning issue because of the disconnect between farming value, so the increase in market value, and lease yields. They are not always correlated. So, some of the data that we were able to get together for the SMSF Association really showed that we've seen farming assets increase by 100%, 120%, and lease yields have gone up by 20. So this concept of then that we're making farmers who are not generating a lot of actual income from this asset paying this tax on this, it's just it's disproportionately unfair in reality for farmers is what we think. This isn't an asset that we're trying to maximise capital value on to, save tax. No, this is an asset that is a multi-generational asset that is there. And that disconnect between those two things is just... We're paying tax on a low liquidity asset, where we also, in 2 years, if we have a fire, a flood, a drought, that value might bottom out completely, and we've just paid tax on something that we never actually generated. So farmers, because of those valuation issues, are really going to be impacted a lot more than others.
Yeah, and I think the reality is all these once in 100-year events seem to be happening every few years.
Aren't they like once every 2 years? I was sort of thinking, well, where I'm from in Perth, we've had, weeks of 43-degree days, not a lot of rain happening. And then on the other side of the country, we've got floods and storms. I mean, this stuff is happening, and we're going to start to see those flow-on impacts happen to land prices. My other, thing about what's going to happen in the future is carbon credits and carbon farming and what impact that's going to have. I think that's going to be I hate to say fun, I'm a nerd, but it's going to be a fun place, to be sort of playing in as to how that interacts with superannuation. So, look, farming, yes, it's a very old industry, but a lot of challenges for the future.
Very good. Well, I've learned quite a few things there, Keith. So yourself?
Absolutely. I would never have considered the soil as part of valuing the land, which probably just an indication of how suburbanized I am.
Wait until you start to get into the idea of storing carbon credits within the different types of soils. Now we're getting really into deep farming.
Absolutely. I've definitely got some cousins that would be ashamed of my lack of knowledge on this subject, that's for sure.
Well, that sounds like a podcast at another point in time. Well, Katie, thank you for joining us. Yeah, I hope a great rest of the conference and thanks for your contribution.
Thanks for having me.
Pleasure.
All right, we're joined now by Scott Hay-Bartlem, who is the chair of the SMSF Association as well as a partner at Cooper Grace Ward. Scott, great to have you on the SMSF Adviser Show.
Thanks for having me along.
Now, Scott, I guess as chair, we wanted to get you on and just give us some insights into what makes this conference the envy, I guess, of many others, in financial services. We are, I think, at the second largest number we've ever had in terms of numbers. And the last time, I think, was when we saw the super reforms in 2017. So there was a lot of reason for people to be coming. So I know you don't want to tell us the secret sauce, but there's got to be a secret sauce here, doesn't there?
Oh, look, I think it's a credit to our members. So SMSFA, we're serious about accreditation. We're serious about education. We're serious about standards. And our members share that dedication. That's why we're all here. So they want to be here to learn about what's going on. They want to make sure we're all collaborating and raising the standards. We're here to make a better SMSF sector, help the members, help everything work better. And this is the place to do that. And we've had, some absolutely amazing sessions so far. And there is so much that is happening with, we found out today that contributions caps are being indexed again. What does that mean?
How was the excitement around the reverberation across the exhibition centre?
I'm getting these texts and going, yes, I can announce that. Div 296 tax is obviously very topical. We always know members love it. We talk about death benefits and what happens. Sessions on enduring powers of attorney today. There's a lot happening, a lot for people to get on top of and learn. And I think it's a credit to our members that we want that continuing improvement, that continuing professionalism. And that's why we're here and that's what we're offering.
Yeah, so we spoke to Justin McHale earlier and we spoke about the diversity of professions that come together here. So how important is that to the success of the industry as well? I mean, I'm an accountant, you're a lawyer, and we can talk about the same thing and learn so much from each other.
Yeah. And look, at the association, we're always analysing what do we offer members? What can we do better to offer members? And one of the key things that differentiates us as an association, as you say, is you can come along, you can hear perspectives from an auditor, an accountant, a lawyer. So it's like a bad walk into a bar joke. We've got actuaries, we've got all sorts of educators, we've got everybody come here. Tax office comes along. ASIC's been here. You hear the different perspectives on these issues. And I think that is absolutely key. And one of the things that we do very well. Now, for workshops here, we make the effort of having two different professionals from two different professions giving you different perspectives. And, you learn so much even from hearing what somebody else says about what you think is an obvious problem, but no, they go, well, from an auditor point of view or from an advisor point of view, this is how it works. And yeah, that's something very special we offer.
I did also want to ask you just quickly, you were reappointed as the chair of the SMSFA as well, I believe. Yes. So you're on for a bit longer.
Another 2 years. So it's been an exciting 2 years. We've had a lot happen. The next 2 years is also going to be interesting. In the Chinese sense,
yes.
At the very least, it's such a great group of people to work with. You feel the vibe in the conference. The association team all works so hard. And I was saying to them last night, they pour their hearts into our conference. It's great to see it successful. We see so many wins that we have with the government at the federal level to get things made better. And so it is an absolute joy to be part of that process.
And I think to that extent, the advocacy that needs to happen is quite significant. And I know, having had conversations with you over the journey, it's been a real eye-opener for you in that role as well. But it's so important as we continue to, and I go back to Andrea Slattery when she talked about building professionalism into this industry. And it is that shining star that we want to get to and make sure that as a sector, it remains robust. We spoke to Justin about some of the concerns around the illegal early access and stuff, but this is where, as a profession and as a professional body, we want to have genuine leadership in these sorts of things and actually work with the regulator to try and get these things resolved.
Absolutely. And we've had discussions with the tax office about the early release. We are regarded in the industry. People come to us, to get us involved in regulation and policy. And we've seen lots of examples over the years where our proposals have been accepted by government and it's made the sector better. And they will listen to us and we have the ear. And yes, going to Canberra and talking to the politicians and Treasury was a very enlightening experience in my grey, not teal suit. Don't wear teal to Canberra.
It's a no-no now?
No, wear teal. No.
Might have gotten away with it a few years ago, but now not so much. All right, that makes sense.
And I guess to finish off, you are finishing off the conference.
Yes. So finishing on death on a high. Hi, Aaron. It's very important.
So we know full well that you don't disclose what you're wearing beforehand. So we're not going to go there. But give us, I guess, some key points that you see as critical and a really burning issues in the context of the payment of superannuation death benefits at the moment.
Yeah, so I'm trying to bring it all together more practically, things we see going wrong all the time. We've talked about them, getting our documents right, getting the plan in place. Some little things in documents can mess everybody up. Had some cases recently where things haven't flowed properly because they haven't been thought through. We got to be aware of what our trust deeds say. It's back to all those really basic things, but we see them recurring and we see they're the things causing problems. Plan for it, get it right, have everything lining up properly, and it have much better chance of it happening properly.
So have you been going through and checking with all the other speakers and how many times they also say it depends?
I'm passing the hat around tonight, Aaron. If you get the hat under your nose, it means you've been caught.
Well, thank you once again. Keith, anything you wanted to sort of wrap up with?
Well, firstly, appreciate you joining us on the show. Always good to be able to get someone from the SMSF Association to join the show since we are at your conference. So that's great. And just thank you for coming on and giving us a little bit of an insight into it. Is there any way you can give us an idea of what's going to happen at next year's national conference?
Oh, Nick, no, that's a Monday problem, Keith. It will be bigger and better than ever. One thing the team does really well is looking at what works and coming up with some fabulous ideas. There'll be some different things thrown in next year, I'm sure.
Very good. Well, let's just hope that we're not having to go through a massive range of change again. Some people might say it's good for business.
You're getting old, Aaron.
But well, I can tell you it's like after a couple of days, you do start to feel the age that you are now. So thank you once again. Like I said, it's been fantastic in your leadership as chair of the association. And look forward to your chairmanship over the next couple of years as well.
Thank you. Thank you for having me.
All right, we are back now. It's your host, Keith Ford, and co-host Aaron Dunn. Aaron, of those 3 interviews that everyone's just listened to, what did you find jumped out when thinking back on the conference, whether, something from Scott, whether something from Julie, whether something from Katie, obviously everyone will now be aware what we were alluding to at the beginning is that we don't know much about soil. So
yeah, that's very true.
There are many other things to look back on, though.
And we also won't be walking down a country town in high heels either, like Katie does. So, but I guess, the most important thing for me, and I've been to, I think, virtually all of the national conferences bar one, and that's somewhat showing my age as well. But, the scale in which this event is, and now operates, most importantly, is quite phenomenal for the industry and someone who's kind of ridden the wave for a long period of time. It's great just to see it continue to go from strength to strength. And, this conference had over 1,300 people attend the conference, whether that was face-to-face or online. So the second largest outside of the super reforms when they occurred in 2017. So that gives you some context as to why people come and the importance of the technical content that gets delivered there that people can then go and apply with their SMSF clients. And again, that diversity of skill sets, and they're all the things that are in essence the ingredients that make a success. And I think it's wonderful to be able to have Scott on board, share some of those insights. And we've previously spoken at the national conference with Peter Burgess, and, the message is the same, whether you're talking to the chair, you're talking to the CEO, or you're talking to anyone else that's involved in the conference at that level, just the amount of work that goes into it and bringing the parties together, including ministers, which we saw. We didn't see one of them. He decided to issue a little video on day one, right before my session, which I don't think went down too well, it'd be fair to say, but I digress. I won't mention which side of government he's from, but they do have more red than blue in it. But yeah, I think from that point of view, I think the conference is certainly one that for me just highlights why it stands out on an annual basis.
Yeah, it was a big conference. You could feel the amount of people that were, in the sessions, particularly when it was something like the main plenary sessions, that they had a lot of people in there. A very large auditorium that at the Brisbane Exhibition Centre there, that was quite large, and a lot of people in it. So that, you could tell how many people were there, and a very large stage kind of thing.
Yeah, I can tell you, for someone that was presenting on that stage, you have to look up quite significantly to see the back of the room. So, and the other way that you could tell there was a lot of people was the plenary session on the end of the first day with Craig Day, where he had the Kahoot quiz actually going, and you could actually see how many people were answering. So it gave you, again, some context as to how many people were there and obviously participating in that knowledge quiz.
Yeah, and one of those things that you had touched on briefly today, but also in some of the interviews when we were there last week, was the idea that there is a real range of disciplines involved in the conference. So, it's not just advisors or accountants or auditors or lawyers, it's all of them kind of thing, bringing their different perspectives, and something that each different part of the sector can pull something from those other parts of the sector and really learn something and bring those skill sets together.
Yeah, and I think that's a really good point, because the reality is you might be across, pensions, or you might be across contributions, or whatever it is, but there's a very different context to those issues that also get presented at that conference. And that may be, as me, who's got an accounting background, to be able to hear a lawyer, where I might understand a lot of the nuances, but to hear a lawyer then talk about the different jurisdictions and maybe specific case law, or you hear an auditor and they give their views on what they're looking to test. And that's why I think the workshops are so popular as well, because you're not only hearing from one party as an expert, you're hearing from multiple parties to give layers to different topics. And I think, again, that provides some really good insights into topics that you just don't get elsewhere.
Yeah, it might not even be something necessarily that you're able to implement in your business or something like that, but gives you that greater, more well-rounded understanding of the sector that you work in. And auditors don't need to know everything that accountants know in this space, or everything that the lawyers know, but getting a bit of an insight into the way that they're understanding things and the angle that they're coming from, I have to think it's valuable.
Yeah, absolutely. Yeah, so once again, they shot the lights out. So congratulations to the SMSF Association.
Yeah, and it was my first one. I've not been to an SMSF Association National Conference before. I had a really good time. I thought there was a lot of interesting and engaging sessions that I listened into, and yeah, I thought there was a lot there of value even to me, someone who is certainly not a technical expert.
Yeah, and we both became soil experts along the way thanks to Katie.
Of course.
Well, as is always the way, Keith, if anyone has any suggestions on topics, speakers and the like, how can they get in contact with us?
That's right. Hit us up at editor@smsfadvisoronline.com.au and we will have a look.
Excellent. Well, I hope you enjoyed our special two-part edition from the SMSF Association National Conference. Once again, we hope you have a great rest of the week and we look forward to you joining us for our next edition of the SMSF Adviser Show. Have a great day. Bye for now.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Feeling trapped by rising interest payments? Escape from mortgage prison with expert refinancing assistance from Finny. We have helped hundreds of borrowers break free from higher loan repayments by finding a more suitable loan. Our expert team can quickly assess your situation, and if there's a better lender available, we'll find it fast. Don't delay. Call today. Speak to a Finny mortgage specialist on 02 8866 2444 or visit our website at www.finny.com.au.